Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday. And we're now sitting here October 5th, 2021, 5:40 p.m. Central Time. The first thing first, if you're watching and you take your cursor, I'll just pretend this is the cursor, and you move it on the screen, you're going to see our icon pop up. If you want to attend the live chat room I'm holding tomorrow, that's Wednesday, October 6th. They'll open the doors at 12:15 p.m. Central Time. You have to sign up. If you're in my mailing list, I've already sent out 2 emails. It means you're not going to get one more. Some of you have written to me, okay, we watch this, Ira, but we're on a smartphone. Let me give you the old-fashioned way. I'll put up the number at the end of the show. You do this. You hit the number, and you go, oh, hi, this is Ira's office. I'd like you to send me an invite so I can attend the 12:15 chat room. Isn't that revolutionary? Whoa, I forgot phones are actually there. And they do work with us on portables on both iPhone and Android. How do you like that? All right. So now we go to the markets and we got to figure out what is going on. We've made zero headway that I can see tangibly, things happening on the debt ceiling, but I do see progress being made within the Democratic Party on the reconstruction bill. It appears that they're getting close to a $2 billion number that maybe they can get Joe Manchin to agree with, but you've still got the senator from Arizona. Enough people aren't giving her credit. She's got to get out there like Joe Manchin and talk to the press. Get herself known. She seems to hide. Get out. Let us all remember your name. I remember Manchin's name. I don't remember yours because I'm not from Arizona. I'm sure if I lived in Arizona, I would. Get yourself known. Now, if that can occur, could it be that we eventually get those deals? I don't know. We know that OCO, you know who she is, they have to hate what's going on, along with Bernie, you know who he is. They can't like that their programs are getting cut. We'll see how they come in on it. That's where you're at with all that. What's the big event of the week? I wish I could say it's my webinar tomorrow, but it's really going to be Friday's jobs data. The market is looking for a 485 to 87,000 figure. Now, don't get me wrong, that seems to be the center line. I'm sure it's going to be something like 350 to up to maybe a million. I'll let you know what the spreads are. I haven't seen them yet, but I know the 485 area is what the market's looking for. Anything near there probably means that the Fed can go ahead and begin the tapering at the next FOMC meeting, announce it, and away we go. I don't think they'll speed it up in this environment. I think they'll taper if they get those numbers, but not at an accelerated rate. We'll find out whatever that means, too. So you got to be looking at that. Then we have October 18th. Now, today's already the 6th. Are they going to be able to meet and do something about that debt ceiling, or does the U.S. go into a default? I can't imagine we go into a default. Is it a possibility? You can't rule it out. I mean, you see how stubborn this is. Last, I started writing tonight in my newsletter that I haven't yet sent out to my paid future subscribers for my subscription, Stagflation, what it is, the last time we had it, some definitions, what it often means. I will tell you this. The last time it was around, Jimmy Carter was our president, and gold took off to the upside in a big way. So those are the things you want to remember. Now, that doesn't mean that our good friend now, Bitcoin, which is pushing $52,000, isn't going to be the beneficiary of that. Gold doesn't seem to be doing, but Bitcoin is. And Bitcoin just keeps, no matter how much you don't like it or do like it, it's gathering more and more followers. And the fact that the Fed yesterday didn't come out and say they didn't like Bitcoin, or the other day, I forgot which day the Fed Chair Powell talked about it, that was a positive sign for it. As we come over to the S&P 500 index, on a weekly basis, the bias is down. Let's define bias. On a close-only chart, which means you're not looking at the week's high and low, just plotting where the market is right now, and then the close each Friday before that. It's under the 18-week average. My definition of bias is when you're under the 18-week average, it's downward. When it's over it, it's upward. And markets that are over fall back and like to fight at the 18-week, and under it, they like to come back up and do it. It is not uncommon that we've recently had a test of it, and we've pulled back up. You're right in that time frame. We'll see if anything happens. As we look at the S&P 500 index on a bar chart now, it's pretty much a mess. You had a market that has all over the board. It's got a downtrend, but each time you try to sell it, these aren't little moves. I'll give you an example. You got as low here as 42.60. The next day you're at 43.60. It's 100 points. That's a lot of money. That is not a little bit of money for you to be playing tight stops with. The thing's all over the board. And right back down now to 42.69 from yesterday's 43.62. The month of October has a history of very volatile trade in financial markets. You have it. By the way, did you look at cotton today? Limit up. I write about that tonight in the newsletter too, why that's occurring and showing you some things, all about China. As you can see, we're just sort of hanging here. Trend is down. The market is fighting at the 100-day average. I know you're going to say, well, it got under. It doesn't have to not do that. It's hitting it every day. That's fighting at it. And if it gets up to the 18-day average, it just proves that the market's still stuck in this. Here's your breakout to the downside. If you get under these numbers, then you have a problem. You could ultimately go back to the 200-day. So far, the bears are in control. The bias is down. The trend is down until you take out 43.62, supports the neighborhood of 43.36. And when I bring into the chart the Bollinger Band, that just reaches down for the other lows. So I'm going to go back on this. I want to go back a chart. Remember, I don't have the Bollinger Band here. Remember I said this is your battleground. Now you're wondering what's supporting those lows. Now you understand the program. That's what it is. What are we at? We're in an oversold condition. Any reading that has a number under 30 on it in the slow stochastic, I think is oversold. So what do we have there? Let me sum it up. A downtrend that has hit downside targets, fighting at the 100-day average for direction. Clear enough? In the Nasdaq, similar story. Lower highs, lower lows, keeps hitting the 100-day average and the lower Bollinger Band. If this all gives ground, then I'm going to look for the 1396 level. If you can pop back over the 4835 level, 1438.50, that's what I meant to say. Then you're talking the 15,050 level one more time. In the Dow, do you disagree that since the market had the bearish crossover that I pointed out to you, the market has been under the weather, so to speak, fighting a battle? But the battle's a two-pronged battle. It's already made the lower low. It hit the Bollinger Band, keeps coming back to the 18-day average. It'll take very little for these markets to get bullish and very little to get going on a new trajectory for further declines. Flip a coin. This thing can go either way right now. In the Russell 2000, lower highs, lower low, battleground, 18-day average of closes. I just see the market whipping back and forth right through here. Then we get to the VIX. Well, today it finally hit it. You know, for day in and day out, this was the first time, if you remember, I said here I thought the pros were going short. That was on September 28th, short by writing calls. Looking for the 18-day average of closes. It's a high probability trade. You often have to take some pressure. I pointed this out every time, but it's what the charts have been doing. Well, the market made its break, just missed hitting it, goes up, comes down. I was telling traders that watch this, maybe you're just better off grabbing that sure money, and you got so close, you're going to play for 10 points, that's all it is. Then it goes back up, and I felt terrible until today when I felt real good when it came back down. Either way, you got out here a little higher than if I told you to get out right there, but I'm very happy with what it did. Then in the bonds and notes, you know, they're just long-term bearish. I mean, that's what you got. You got lower highs, lower lows. The market is fighting a battle, and it's failing to get back over the 100-day average, which means the lower Bollinger Band could be the next target here. When you come to the 10-year note, lower highs, lower lows. Oversold. That part I do get. But now you had another event take place. This is yesterday, which is today as I'm recording. Where do we have the 18-day average in the 100? The 18 is over it. What just happened tonight? Now you got a bearish crossover. That often leads to a lower break. That's what I'm looking for to happen. Dollar index keeps having trouble at the upper Bollinger Band and lost its embedded reading and didn't get it back. The sucker play, and I'm probably the sucker here, is to keep thinking it's going up when you lose that reading. Normally that reading means that for whatever reason, the market's going to try to get back to that 18-day average of closes before it makes a new high on the move. Watch how wrong I'll be, but that's what my work says as a technician. The euro surprised me. The euro offered to sell the other day, and I was scared to tell my clients take it because of what I'm expecting in the dollar. If the dollar's going to break, I'm looking for the euro to rally. Didn't work out that way. It kept its embedded reading, and it broke. We'll see what happens here. In the British pound, I'm looking for a failure as you get back towards the 18-day average of closes. You'd have to cross this pattern, get up over those highs to convince me that it's just nothing more than a bear market rally. Bitcoin, overbought, first part. Higher lows, higher high. Do you ever buy a Bollinger Band? If you say yes, never watch this show again, because it's exactly the opposite of what I teach, and therefore you're not really paying attention. Maybe you're eating too much popcorn as you're watching me. No, you let the market pull back. If you embed, you'll have new way to come in. The trend has been up since right here. Once across the 18-day average of that 45,740, it just took off to the upside. Then when we're looking at the energies, China has told its banks and lenders, because they have different ways that they lend money within China, give money to the energy companies that we've approved, give money to the coal miners that we've approved. What I don't understand is the word we've approved. I kept reading the article. They say approved coal miners. Well, there are versions of coal that are dirtier than others. You know that. I know that, certainly, and I'm no miner. And I guess that's what they mean. That what they're saying is they don't want to go into this winter without reserves. Now, they don't produce enough oil to do anything on themselves, so you can't do anything with that. They're going to have to import it. Speaking of oil, you just keep staying to the upside. Same in the WTI. I can't turn that off. It's in the background, folks. Sorry. Still embedded. You do not buy over an upper Bollinger Band, and the same in the nat gas. It's just running to the upside there. You can see that the market's overbought. Let it do its thing. You know that I think come this winter, you're going to be a lot higher. But the question is how to get involved now. You need the market to pull back for you. Without it, watch out. Keep your eye on cotton. Cotton went limit bid today, and it just locked in there. You've got to understand that under the Trump administration, we went to help the Uyghurs. I think I'm pronouncing that properly. It's in a high cotton province, and we said we will not let China export anything to us coming from that region because we believe they're using forced labors. If that's the case, fine. So what China just said is, that's okay. We'll buy all the U.S. cotton we can. We'll get Indian cotton. We'll make the goods and send them back to you. So there's tremendous demand for our cotton from China. They're making the goods with it and sending it back to us at higher and higher prices. Great policy, but I do get forced labor, and I understand it. Do you remember diamonds, blood diamonds? Same thing. Got to do something to stop all that. Again, remember what we're going to have. We're going to have the live webinar that's coming out tomorrow. It will be very fast-paced. I open it at 12:15 to let you get in. I'll remind you about the questions. You'll be able to get your voice all set and hear my voice. I don't let everybody talk at one time. Can you imagine the nightmare that would be? But you can write me questions, and that's during it, and I repeat. I'll give you a first name. I recite the question. It could be about anything. Futures, stocks, spiders, ETFs. You don't have an invite, Do it the old-fashioned way, which you're not used to. And no, it's not going to be smoke signals. Pick up your phone, call 866-973-2077. Our staff will email you the invite. I'm Ira. You have a good day. Remember to click here. That's the simplest way to get yourself set up for the webinar. Take care.